After freezing earlier this year, the IPO market is back and arguably bigger than ever. Last week, we saw one of the flashiest deals of the year when Circle Internet Group came public. Now, this is a crypto platform that's the issuer of the second largest stablecoin out there, and Wall Street lapped it up. We will explain stablecoin. Just 1 second. Now, see, there was so much demand for this deal that both the size of the deal and the price of the offering were raised twice. Originally, Circle was looking to sell 24 million shares at a price range of $24 to $26. But by the time the offering was finalized, it had been upsized to 34 million shares and priced at $31, raising $1.05 billion in gross proceeds. When Circle was set to begin trading last Thursday, there were whispers that the deal was something like 20 times oversubscribed. I mean, honestly, you always hear that for hot deals, and you can never really take it too seriously. It just turns out to not be the case. Well, man, it might have been true this time because CRCL opened for trading at $69 on Thursday. That is up well over 100% from the deal price. And that was just the beginning. Circle ended the first day at $83, up 168% from where it came public. Then tacked on another $24 on Friday. We're getting another $7 and change today, closing at $115. Did these bankers misprice it? So what the heck is going on here? Why are investors so freaking excited about Circle? And by the way, what's a stablecoin? All valid questions. Well, let me explain. First, let's talk stablecoins. If you think about the world of cryptocurrencies as one big casino, then stablecoins are basically the chips for the crypto casino. When you're going to the casino in Las Vegas, you give them your change, right? You give them dollars. In exchange, what do you get? You get chips with a dollar-based value assigned to them. Crucially, while you're at the blackjack table, you wouldn't want the value of a dollar chip to fall to 50 cents, right? Or even just to 95 cents for that matter. They're valuable because they can be exchanged back dollar for dollar. Same deal with stablecoins. You give your dollar to the backer of some stablecoin, in this case, Circle, and in exchange, you get a stablecoin. Circle's stablecoin is called USDC. It's worth $1, and crucially, will stay worth $1. That stablecoin then can be used to buy all sorts of other cryptocurrencies. It can buy Bitcoin. You can buy Ethereum, Dogecoin, Polkadot, Fartcoin. You name it. Think of Bitcoin as the poker table, Ethereum as the blackjack table. Why don't we make Fartcoin the roulette wheel, all right? Once you swapped your stablecoin for a currency, you're playing that game. Everyone talks about cryptocurrencies, but you never want to use most of them for actual transactions because they're so volatile. Stablecoins, though, are basically digital dollars. Now, the biggest stablecoin issuer globally is something called Tether. In fact, with a current aggregate market cap north of roughly $155 billion, Tether is the third largest overall cryptocurrency, behind only Bitcoin and Ethereum. But I've mentioned before, Tether is a little questionable. It's controlled by some mysterious figures, and more importantly, it's not totally clear what Tether's doing with its reserves. Now, in the spirit of fairness, there's never been a big blow-up with Tether, but they're not exactly a model of transparency. And if Tether doesn't like that classification of their business, their reclusive chairman, Giancarlo Devasini, is welcome to come and money anytime and tell me why I'm wrong. I bring this up because over the past 7 years, Circle's emerged as a more sanitized, less sketchy version of the stablecoin concept. USDC was launched in 2018. From the get-go, it's been focused on offering better transparency about how its reserves are invested. In fact, when Circle mentions Tether in its prospectus, they refer to it as an El Salvador headquartered affiliate of China-based crypto exchange Bitfinex. Unlike Tether, which invests in some riskier assets like secure loans, precious metals, and even Bitcoin itself, USDC is backed by genuine reserves of fiat currency. And Circle's found a lot of success with that pitch. The market cap for USDC has grown to around $61 billion, which makes the second largest stablecoin and also the seventh largest cryptocurrency overall. The primary way that Circle makes its money is by investing their reserves. When you give them $1 and receive $1 USDC in return, Circle then invests that dollar that you've parked with them, and they get to keep the profits from those investments, which are very safe, vanilla things, like simple bank deposits, bearer interest, along with short-dated U.S. Treasuries, overnight Treasury repurchase agreements. Now, Circle Internet Group does some other things beyond the core USDC stablecoin business. They have a euro-denominated stablecoin offering that's called the EURC, largest in Europe. They have all sorts of auxiliary products for the USDC ecosystem, like a type of crypto wallet, institutional payment solutions, and tools to help develop, create smart contracts. But at the end of the day, the stablecoin business is responsible for the vast majority of Circle's business. Last year was 99% of their revenue. Holy cow. Hey, speaking of the financials, Circle's numbers are pretty impressive. In the first quarter of the year, they posted 59% revenue growth, 75% net income growth. So at the end of the day, where do I come down on Circle? Look, this is actually a pretty darn good business. USDC is popular. The financials look pretty good for an IPO name. But the stock, okay, look, very hard to recommend after watching the company's valuation jump from $5.5 billion at the beginning of the IPO process to over $25 billion in just a matter of weeks. I mean, if we divide Circle's 2024 net income by the number of shares outstanding after this offering, then last year it earned about 70 cents per share. At its current price, that means Circle's selling for roughly 165 times last year's earnings. For comparison, I'm going to use Coinbase as a compare. That's roughly 27 times last year's earnings. Now, if we use the growth rate from the first quarter of the year and project it forward, then Circle's trading at 94 times that back of the envelope earnings estimate. Coinbase trades at roughly 50 times. Okay, long story short, I like Circle. I'm having trouble getting to this price. I'm not willing to pay through the nose for it. It doesn't help that more than half of the shares sold in Circle's IPO came from early investors and company insiders, including the CEO rather than the company itself. In part, that's because the company didn't really need to raise money, which is good. But if the insiders are ringing the register at 31, do you really want to be a buyer at 115? Or maybe the insiders were dead wrong. I don't know. Plus, Circle's joined at the hip with the crypto ecosystem, and crypto is inherently volatile. I think you'll get a better opportunity simply by being patient, honestly. The IPO market's starting to get a little crazy here. Remember CoreWeave, the AI data center play, came public in March right before the IPO market went on hiatus for a few weeks. I loved CoreWeave when the deal was priced poorly at $40 and stock plunged to the 30s. But just 2 months later, it's $162, and that feels a little extreme to me. This is the type of action that gets people hurt, so I need you to be a little careful. Here's the bottom line. Circle Internet Group's a solid company, but the stock right now has gotten too hot for me. I can't recommend it up here. Why don't you let it cool off before you even think about pulling the trigger? Wow. What money's being made, though? Let's go to David in Tennessee. David.
Hey, I just want to get your quick thoughts on Marvel Technologies, MRVL.
Okay, it's starting to react correctly. When they reported that great quarter, people didn't think it was that good. That's nonsense. Matt Murphy did a terrific job. I like the fact that the stock bounced at 60 and then started heading back. At one point, it traded 71 today. I think you're in great shape with Marvel Technology. I really like it. Okay, guys, this Circle, I know you're going to, it's so hot. It's just so attractive. There's a lot going for it now, but the stock is simply too hot for me to recommend at these levels. Let it come down before you consider buying. It's okay. There's much more Mad Money, including my exclusive with data analytics firm 100X. You know we love the AI chatbots on Mad Money, but which is trending most favorably with consumers? I'm getting the numbers from the CEO, and which is not doing that well. I got that too. Then rotations come in all shapes and sizes. I'm sharing how to spot one and what you can do if you have a stock caught in the middle of that kind of action. And of course, all your calls rapid fire tonight's just a little lightning round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.